Hey listeners, if you want to stay ahead of the market and make smarter real estate moves, then our recent update from our IPG meeting is a must listen. Let's get into it. You're listening to the Manning Up on Real Estate podcast with your host, Cameron Manning. We bring you the industry experts each episode who will help you man up on your real estate career. So we're going to dive into our next segment here is the market update. So this is a segment we typically do every single month, letting you know what's happening in the market. So a well-advised investor is someone who can make the right choices and make the right decisions when they're putting offers on property. So we like to cover this, kind of show what's been happening in and around the Lower Mainland right now. And so that way, if you guys are putting offers out there, you guys are making them very strategic. First things first, we just saw that home sales saw a modest but encouraging uptick in May. So it is nice to see we are starting to see more buyers coming back. I did talk about this last month where I said we are starting to feel it a little bit. And the interesting demographic that we're seeing it from has been the first-time home buyers. And to me, that's always a little bit of an indicator that there's maybe a little bit of, what's the word I'm looking for? Like strength coming back into the market when the most scared group starts getting out and buying. The ones who always say, I'll never be able to afford this market, suddenly are now jumping in and putting offers out there. This year alone, I've worked with more first-time buyers than I have in my entire career. So that's kind of an indicator to me that maybe as investors, we maybe should start throwing some offers out there. Now, what we're going to look at is the inventory compared to what's happening with sales and what the relationship has been on pricing and a couple of other indicators to kind of see, are we getting good deals out there on the market or not? So the first one we're going to look at is the inventory. And we've all heard the news. We all hear it. The inventory has been going up like crazy. As you can see, the top line there, that is the Greater Vancouver market. There's over 16,689 listings in the month of May. And compared that to just last year, that's over 3,000 more listings. You can see that steep increase. We continue month over month having more people pouring their properties onto the market. You can also see a significant jump in the Fraser Valley. And even though this looks like a flat curve, it's still a bit up in the Chilliwack and District area as well. So what does that mean for us as investors? Well, if we're trying to sell, well, pricing is absolutely key. We need to make sure that we're taking all factors into consideration. There's lots of inventory. We can't likely get what someone got last month. We have to factor all that in. But as buyers, we have choice. We don't have to run and put an offer on the first property we see. We can negotiate a little bit more. Days on market is going up. So we can absolutely go and make our money on the buy. Now, in terms of sales, we did see that there's a little bit of an uptick. So you have seen a little bit of growth in the market. But considering we have over 16,600 listings on the market in May and only 2,222 sales, it really shows that there's not a ton of overall activity, right? So sellers are getting more and more motivated as the days on market tick up. So what's the relationship between that and the price? Well, as we can see here, one market saw a little bit of a jump, the Greater Vancouver Market, so a little bit up over last month, but you can see it's been fairly stable, kind of just bouncing up and down. It's pretty flat right now in Greater Vancouver. Fraser Valley has been seeing a little bit of a downward spiral here. Last year, the average price was almost 1.07 mil, and now we're sitting at just under $1 million right now. So we're seeing prices come down in the valley. And then as well in Chilliwack, last year was sitting at about 830, now down to 771, which is crazy to think because I remember doing these presentations like 2 to 3 years ago. And like Chilliwack, I was saying, okay, average is sitting at about 1.1 million in Chilliwack. First of all, when I started saying 1.1, I was blown away because I remember when Chilliwack, I'd say, I've been doing this for 12 years now. I was saying, okay, Chilliwack's at 280,000 for a detached house. Then I hit $1 million. So it is nice to see it's come back down a little bit more normal. And a big reason for that is because during the pandemic, these two markets were the ones that took off the most. Right? Everyone was saying, I'm leaving downtown and I'm going to the valley because I'm going to trade in my $800,000 condo and buy an $800,000 house at that time. So that's why we saw that market really took off. And that's also why they were the ones they overinflated. They've now come back down to reality. But still, over the last year, it's still pretty flat. We're not seeing huge dips or huge rises right now. But here's where I really want to say, are we able to find deals out there? And how do we know we're getting a good deal in the market? So one of the things that I look at as an agent is to say, what kind of market are we in? We use a sales to active ratio. Anything that's typically below 12% is in that buyer's market, right? That's where you're getting your best deal. As you can see, we are flirting in the buyer's market. So that means there's still a bit of activity. We're really balanced right now. Anything that hits about 20% or above, that's a seller's market. So we are in that buyer market territory. And when we hear buyer's market as investors, that's when we need to take action, right? Warren Buffett always says, be greedy when people are fearful and fearful when people are greedy, right? We got a lot of fear in the market, and that's where as investors, we can make smart moves out there. But here's the one I really want to point out, because I've been watching this metrics right now, even with my first-time home buyers, to see if I'm getting them good deals or not. And that is the price to list ratio. So what we can see here is comparatively, the Greater Vancouver market is averaging about 96.9. So if that's the average of what people are getting, that means some people are still paying close to full list, other people are paying below. If we get anything below that average, we have definitely made some money on that buy, or we've hedged the market a little bit. You can see in the Fraser Valley is orange. Fraser Valley is at 96.8, so close to what Vancouver is doing. And then Chilliwack and District's a little stronger at 97.1, but they're all fairly similar. So a good example of this, and this is where when I'm talking to clients, we actually have to get very granular, right? We're looking at the sub markets. We were talking earlier, there's no such thing as a Canadian market, right? You had a property in Nova Scotia and you said it sold like this, you're trying to sell some properties here and the days on market are going up, right? So because there's no such thing as a Canadian market, there's no such thing as a Greater Vancouver market either. There's no such thing as a Fraser Valley. So as you guys are starting to work on your investment strategy and you're looking at properties, you really have to dive into the real microeconomics of that area, because a detached property in Chilliwack might be operating differently than a townhouse, might be operating differently than a condo. Even within condos, 1 bedrooms might be moving and 2 bedrooms might be slow. So you can really dive in. Now, a good example of this, using this as a metrics to make sure we're getting a good buy for client. We had a first-time home buyer who, in the area in Cloverdale where they wanted to buy, we were looking at a 2-bedroom. 2-bedroom condos were still selling at 99.9% of list. So people were shaving off a couple $1,000 max. And we managed to get them about 96%. So we found that right motivated buyer. It worked for what they wanted as a first-time home buyer. We negotiated hard. We had a few tactics about throwing in the couch and everything, and they didn't want to give away the couch because they bought it for $5,000. We used that $5,000 to get $5,000 off the price, and we got them a much better price on the market compared to what all the other buyers are getting. So this is a metric that now that we're in these buyers market territories, we can use this as a bit of a benchmark to make sure that we're actually getting a good deal on the market compared to what other buyers are paying. That at least gives you a little bit more comfort knowing you've put a good offer in and you've locked a good property down. Now, at the end of the day, all of this beyond everything, you know you got a good property when it's cash flowing, you're happy with it at the end of the day, and it's aiming to what your goals are in the portfolio. So that's all kind of said. This is just extra metrics to really kind of get nerdy when you're looking at your investments. Now, what we like to do is we take a look at what's happened out east. We're going to bring it out west, look at some key markets that a lot of investors that we've worked with have invested in. First one here is the Chilliwack market. As we can see, detached is averaging 929. It's down almost, it's down 9% over last year. Again, it's quite nice not to say Chilliwack's over $1 million. And in fact, I'm seeing a lot of great investment opportunities with suited houses in the 700s right now. So again, this is factoring in all sales in the market, including the higher end properties and lower. So it still brings that average up. Inventory is up 22%. Days on market's kind of still averaging about a month to sell if a property is well priced. Townhouses are actually showing that they're up over last year. Their inventory is not super high. It's only 75 listings right now. So there's the townhouse market out there we are seeing is still moving. This is exactly what I just talked about, right? Those micro markets, how two different types will operate differently in the same overall market. And then the condos are down about 10.8%. Inventory is up. Days on market are going up. Let's take a look at Abbotsford. Abbotsford, 1.2 million, down 6.6%. So it's coming down. Townhouses are down just slightly, about 3%. And condos, not too bad. They took about a 2% hit over last year. Inventory is up across the board there, and days on market is all going up, getting closer to 40 days to sell a condo or a detached property. Still about a month for those townhouses. Townhouses overall in most markets, I have found, still moving a little bit better because that's that middle ground, right? You still have people who are upsizing. They want to go to that townhouse. They can't quite make it to the detached. And you also have the people who are downsizing. They're not ready for condos yet. Actually, was just showing a buyer today where they're looking to downsize and we're looking at townhouses, right? They still want space, but they're not like, I don't want to be in a condo, I want a yard, right? Mission market. So Mission still sitting at an average over $1 million. So just down about 2.5%. Pretty big jump in listings overall. The attached market in Mission, I've talked about this quite often. It's really lacking in that market. It's a very heavy detached market overall. However, there is a lot of new development that is happening in that market. So we are going to continue to see that inventory increase as new developments close, but still townhouses 96 on the market. I mean, they're sorry, 56. You got a 93% increase, and that's still only 56 units, right? So just shows how limited the attached market is there, and 35% increase with 54 listings there. So Langley, we do a lot of sales in Langley. We did a lot of pre-construction in Langley over the years. You can see here that detached still up over 1.5 million, up 26% on the total inventory. Townhouses down a bit and condos about matching the same. Inventory up across the board. Pretty similar as we kind of go through these markets. Maple Ridge, not really too bad. They're holding pretty steady over last year. Maple Ridge detached is a little stronger. We just sold a couple of houses in Maple Ridge that actually sold pretty quick. So good pricing really helps out a lot. Townhouses pretty flat, condos pretty flat. So Maple Ridge has weathered the storm over last year, a little stronger than some of the other markets. And in fact, condos, the inventory is actually down 22.8%. So that's good if you are looking to sell. I took a condo listing just last week. We sold it 3 days on the market. So that market is still moving. This is those micro markets we talked about, right? So when you're looking to make offers, you need to know these things. What is moving, and do you have to pay more, or is it a slower market and can you negotiate a little harder, right? Surrey, it's up actually in the detached market a little bit, but the inventory has risen down in the townhouse and down in the condos, inventory up across the board. And Surrey, I'll just speak to this one. You can see 45 days. Surrey Central specifically, there's a lot of opportunity in that market because nothing's moving. So there's a lot of motivated buyers, especially in the assignment market right now. There are a ton of clients. We actually have a couple. So if you guys are interested in some like walk away from deposit deals, we've got a couple that we have on the market right now where people are literally saying, I'm going to walk away from 100% of my deposit just so I can get out of this deal. They're walking away from anywhere from $60,000 to $80,000. Okay. So that means that their prices are really attractive considering what's active on the market. And these projects are closing quick. So the prices are pretty good. They won't quite cash flow quite yet, but they're going to be like fairly break even. So that's kind of nice to see. And then we head over to Vancouver. We do have some clients who like to operate in the Vancouver market. 1.876 million still for a detached house in the Vancouver East area. Over 1.1 million still for townhouses and condos. They're down slightly at 773. Inventories up across the board. What I'm finding a lot of my clients are doing in the Vancouver market is finding the older condos right now and getting in and renovating those ones because they're still moving somewhat, still under 24 days. So there's been some opportunity there, but you really have to make sure you've got enough of a buffer that if the sale takes longer, you're not like eating up all your profit, right? So everything's about being super conservative on your numbers when you're analyzing your properties. But that's basically what's happening in the market right now. Again, we like to give these stats so you guys are fully prepared. If you're taking action out there, you're thinking about these things, you're asking these questions so you can make smart, sophisticated offers.